In this video, you will going to learn the trend line secrets, how to draw trend line and how to use for your generating profit in the market. Especially it will be helpful for the investors or the swing traders, those who are aspiring to become a successful trader, and the day trader who are doing regular trading. The professional trader secret for trading with the trend line. How to draw trend line for investment, swing trading and day trading, it's a secret. What is the confluence principle you are going to use that will help you to take high probable trades, where the most of the institutional traders and the professional traders take action. That area we call as the confluence. So in the detail, with along with the other leading indicators like central pivot range, so how to draw trend line and how to do it along with the central pivot range, here we are discussing. You should watch this video till end so that you will learn the high probability trading. So subscribe to the trading direction.
Professional traders and institutional traders, they use Trendline very effectively because they practice it. And if you also learn the pro tips, so you can also use effectively for generating profit. Trendline trading secret we are discussing in this video, and if you watch this video till end, so that you will learn the very valuable information. There was a question how to draw and use trend line effectively, and that is why we are presenting this video. If you have any questions, you can comment on which topic you want next video, so that we make that video specially for you. What are trend lines? A trend line is a line we draw on our chart that connects the swing high and swing low during the trending market. This is called as a trending market. This is a rising trend. So what happens? Any line which connect any 2 points. Okay, let us say this is a swing low. Wherever this market goes high and touch down, this we call as swing low, and this is swing high. So where the uptrend is drawn by connecting two swing lows, and if you extension of this line will act as a support. This is the magic. Here either you can plan for the long entry, or if you are short for this position, you can book your profit. That way the trend line will guide you where to enter in the trend and where to exit in the trend. It will help you to identify the uptrend or downtrend. Definitely this is an uptrend because it is connecting the swing low. Here first entry, this second point, okay, in third point you can enter for the long, and this is applicable for the most of the time frame, and the higher the time frame, it is more effective, that long term period. Trend lines can be drawn upper side and lower side. It called as a channel, and channels are used for this profit booking. You are entering here for the long, and once you touch to the high of this channel, you can book your profit, or near of the channel you can book your profit. Whenever goes to this higher channel, it gives selling. Okay, so see sharp selling rally, and it touch to the lower channel. Once it formed this lower channel, so third time also it acted as a support, and again trying and testing to the higher channel. Okay, so this way it will guide you for booking your profit. So literally the trend line is having, this is a run, this is a pullback. Stock market moves like this, and it is not like other mathematics. So beginners especially, you need to understand, they fall in the trap of this pullback. So you need to understand this concept. Wait patiently for entering near the trend line. So you should not lose money here if you wait. And this is a sometime trend line may this touch or may nearby, so you need to adjust trend line sometimes. Suppose initial trend line is like this, and the later trend line this little overlapping or some gaps you can find. Once you do practice in the stock market regularly and with the professional training, you will be perfect to identify the trend. Bottom we call it as a swing low, and whereas this highs we call as a swing high. Check it here, swing high, swing low. Okay, so this way the market goes in this direction. If it want to go down, then it goes down. So this the higher highs. Okay, so high, this is higher than this, and then again this is higher. Okay, higher highs and higher lows. This below and little lows formed but higher side. Again low form but higher side. So low form but higher side. So this is the higher low. Okay, higher low, and this is higher highs. This we call it as an uptrend, and we will see example of downtrend also in this same here. In the downtrend, this forms the lower lows. Here I am drawing one trend line. This trend line forms, this is lower lows, again lower lows, okay, and lower highs. This is lower highs, this is lower highs. This once this form, this second swing, you can draw a trend line. Bottom also you can draw a trend line. You need to use this trend line drawing tool. Okay, so for effective trade entry, again wait for the entry at the high. Once this the doji candle formation happen, and once this red candle forms, you can enter for the short. Wait until it will touch to the trend line, again pull back. Okay, run. So whenever it is touching to the trend line, it is running. Okay, downside. This is a perfect trend line. Sometime the market may form perfect trend line or imperfect trend line, which we are learning in this video. So this is a clear moving uptrend. And don't enter the trade blindly just because price has touched to a trend line. You always wait for the price action, which we will discuss in this video. Trendline is, you can use trendline to dominate in the stock market trading. Identify the trends, entries in the direction of the trend, which will give more profits. Always remember, if you are in the direction of trend, so that will give you more profit. And some trendline rules are there. I will discuss. Ignore the candles and wick when you are drawing a trend line. There was one more question. So, shall we touch to the wick or shall we touch to the body? Actually, closing price are very important, because the closing and opening price indicates the price, the agreed movement, agreed level where all the buyers and sellers are agreed to close that position. Wherever possible, most of the time ignore the wick, but sometime if it is touching also, it is okay, but try to get most touches on your line so that it should become a valid trend line. So here the wick we have ignored, and we have considered the body. So it is acting as a very effective, and when it broken this trend line, and this another trend line we have drawn, this took support, and again this act as a support in this. When this break trend line, this downtrend, So the downtrend line breaks, so uptrend line forms. You can draw this uptrend line, and this uptrend line will act as a support in the next trading. If you are a beginner, especially I suggest you to draw trend line on a line graph and then change to the candlestick pattern. This will minimize the noise in the market and help you to identify clearly the trend. So this technique is using for by the professional traders. They have multiple this display, and that multiple display, one display they keep line chart so that there should not be any confusion and this validation. So this way you can also use by keeping two desktop or three desktop in front of you. And if you don't have any desktop, you can use your mobile also. How to draw trend line? If you have drawn this trend line, keep some little more space so that you will come to know this price will bounce and come back, bounce and come back. Okay, so this way you need to draw the trend line. I will show you more examples on the chart. Third time it has bounced, fourth time also it has bounced. So this way you need to check. Treat trendline as areas to filter out the noise. Instead of one strict line, you should treat it like an area, and you can draw a two adjacent trend lines so to filter out the noise, especially the wick formation. This wick only the novice trader they enter for the short and they make mistakes, whereas the professional trader wait here and once week form they take for the long entry, and there what they begin the making profit. More connecting points is the better and valid trend line. So this more connections it indicates this is valid trend line, and again you can enter for the fourth time. There is a no confusion. Spacing between the points matters. If this touching first time and second, see take it has taken the considerable duration, this much amount of time to touch this trend line. So next time also this is taking time, so this is acting as a valid trend line and it is bouncing very sharp. So this time between the touches also matter. Use trendline as a guidance and not their own for trade entries. The pro tip is whenever the prices are clustering and they are again touching again and again to the trend line, this is losing momentum, and here the breakout is happening. Time between two consecutive touches on the trend line become shorter. That means the trend line is becoming weak and that is ready for the breakdown. Use trend line in combination with the price action. Don't add unnecessary lines on your chart when trading because you will be distracted. Focus on the bars, that is candlesticks. See how they behave once touch comes near the trend line, and don't focus on line itself. If you are enjoying this video and want to make more videos frequently, hit the thumbs up button and show your support to the trading direction. Trend changes happens, this break of the trend line can signal possible for the trend change. See here consolidation, this first time, second time, third time, fourth time, and this changed the trend. Now you look for the long entries, long entries, long entries. You can also draw the uptrend line. Steep trend line will not sustain for the longer period. So this angle is very steep. So it will not sustain for the longer period. So it may fall. So trend line angle is also very important. The 45-degree angle trend line is a perfect trend line. This is a high probability area where lot of trader take action, and support and resistance trader also take this action. I will show you here that definitely CPR is there, so that the institutional players also use central pivot range for their trading. Here the same graph I am showing it with the central pivot range. This is the central pivot range, and this originating from the CPR, so this will act as a resistance. So this pivot force trading example, and it is matching with the trend line. So this is here the most of the traders, and first 5 minutes red candle formation happens, so price action is also creating, the sellers are in control, so you can enter with the 25% retracement and by keeping stop loss above this red candle. So this will definitely give very fast selling rally. You can use this selling rally for profiting in the market. Multiple time frame analysis we will do for the confluence principle. This is 1 hour time frame. For the swing traders, they can use 1 hour daily time frame for their trading. This bullish candle breakout break range. So this is a trend line. First touch, second, and third. This is a fourth time touch is there. Where is a support? This resistance act as a support. Check it. This way you can find the high confluence. This bullish candle, this range breakout, these are inside bars candle formation, and this breakout is happening. This is valid breakout, without doubt it is moving in the direction. Very fast movement, very fast movement. So multiple time frame analysis will also help you. We will go for the 15 minutes time frame. Initially we have analyzed for the 1 hour time frame. The same trend line you check it, and again this touching this swing lows, and this is a first time, second time, third time, fourth time it is acting very strong. This range it has formed, and this range breakout or the day high breakout, and this previous day high and this resistance will become very strong support, and on that day the narrow CPR is there and the CPR is the rising CPR. So this breakout is very effective for booking your profits. So this is how to enter the trade. That was a question, and this way you can enter and spot for the high probable trade. Wait until and unless it breaks this high. See, first it has touched this support line. Second, this is touched to the support line, this dynamic support, and this horizontal support, and this you should not enter immediately here. You should not enter. Once this break this range, then you enter by keeping stop loss below. You will get excellent rewards here, excellent rewards. The higher time frame, weekly time frame trend lines may be like this. So initially we have drawn this trend line, first touch, and these two touches are there. We have drawn, third time it has respected. Then once it bounced, it has touched with this trend line, and it is again coming down and again took support and formed another trend line here. It is there, it is at resistance. If it breaks, it is breaking the trend line for longer duration. So it may breaks and it will give very good move. This is how you look on the YouTube. Trendline #1 secret trading strategy. You should subscribe and watch these videos, option buying, and we take a lot of efforts to make video, and you should share this video with your trading community so that the valid training knowledge, valid trendline secrets should be known by the retail traders. Support to the trading community to grow you. Strong trade when the price respects steep trend line. Healthy trade when that forms a 45-degree angle, and a weak trade when the trend line is flat. Okay, and don't force trend lines. If they are suitable, then only you go. but if they are not, there won't be suitable price movement. A healthy trend line example, this is a 45-degree trend line which is very healthy, and this is a bouncing and steep, very fast pullback is observing. The one thing you should learn, this very fast pullback may observe. Okay, so whenever this uptrend, the fast pullback. So whenever the prices are moving very away and they are touching with the higher trend line, so you should remember the here you should not go for the long entry. That this when it price action form, this is 180 reversal pattern. Here you can take for the short entry unless and until it touches to the bottom trend line. A weak trend, the use for buying and selling for the both the side. This is a relatively flat trend line. This level you can use for the long entry, and you are achieving your targets perfectly. So there are pullbacks types: shallow pullback and deeper pullback. Some sharp pullback during the breakout you may observe, and we will learn this in the episode 2. So how to use your pullback also. Thank you very much. I am Anil Hanegave. My email ID is toptradingdirection@gmail.com, and you can find WhatsApp number in the comment section and description section. I have published a book, Profitable Trading Strategies with Psychology. It is available on Amazon and all the platforms, and the print copy is also available in your country. Just you click the link below in the description box, you give order so that you get valuable learnings. If you want to join our advanced trading sessions and the webinars, click on the registration link. You will get registration link, and once you registered, you can connect on the WhatsApp also. And we are getting many requests. Just ping and mention your name. You are a subscriber of Trading Direction. We will reply you, and you can register for the webinar. The webinar ranges from, it starts from the 100 rupees to the 4,900. That if you are a beginner, you can take the 1,000 rupees course, which is very important, and then you, if you are advanced trader, you go for the 4,900 course. Okay, I wish you a very happy investing and trading.